Good afternoon, everyone. Welcome to today's Self-Directed IRA Saturday webinar here with Quest Trust Company. I am super excited to have with us today Fred Moskowitz joining us all the way from Philadelphia to talk to us today about how to supercharge your IRA and investments with note investing. So I'm really excited for today's presentation. But before we get into the main presentation, I do just have a couple of quick announcements for you guys, kind of as we let people get signed on here. We've noticed in a lot of these webinars, especially these large self-directed IRA Saturday webinars that we host every single week, we get a lot of new people joining us. And not only that, we get a lot of people joining us that, maybe it's been a while since you've attended one of our webinars or classes here at Quest. So to everyone out there, thanks for joining us. We are super excited to have you here with us today. In my slides here, I'm going to take you guys through just a quick little tidbit about who we are at Quest and how we can help you with your real estate investments, and as well as some of our upcoming events and a few other exciting announcements there as well. So, quick little background about us. Who is Quest Trust Company? At the core of our business, we are a self-directed IRA custodian. We're based out of Houston, Texas, but we do have offices in both Dallas and Austin as well. And we do have clients all across the country. So even though physically our offices are in Texas, we do operate in all 50 states. And some of our clients even invest into different types of assets outside of the US as well. So we're a pretty good sized company. We've got about $2 billion in assets under our management. And the reason why I always like to touch on that is because all of that $2 billion in assets that we have under our management is all privately held assets that our clients hold in their IRAs, whereas most traditional, Americans only have their IRAs invested into stocks, mutual funds, and other types of publicly traded securities. At Quest, we teach our clients how to use their IRAs to invest into a completely different class of assets, things such as real estate, private placements, multifamily, and what we're going to talk about today, note investments. Notes is a very popular investment option that we see among our clients with their IRA accounts. At Quest, I think last month we funded about 500 to 600 new transactions throughout the month, and almost 50% of those were some sort of promissory note that our clients have self-directed their IRAs into. And guys, the biggest benefit of this, the reason why this is so important, is because when you have the ability to self-direct your IRA into these different types of assets, all of the profit from these deals still goes back into your IRA, potentially without being taxed. All of the gains grow either tax deferred or completely tax free. If you want to know more about exactly how that works, be sure to check out some of our other classes that we have on our platforms and our YouTube channel, but I'll go ahead and keep it moving here. Again, we're a pretty good sized company, got about 100 employees all spread throughout the state of Texas. But the most important bullet point on this slide here, the reason why it's a different color than everything, is because at Quest, please be aware that we do not give tax, legal, or investment advice. We put on a lot of education. We are the nation's leaders in high quality self-directed IRA education. But please be aware, do not rush into investments. Make sure that you're doing the time to vet the people that you're working with, and make sure that you're taking the time to use professionals to structure your deals properly. Really cannot stress that enough. But now that you know a little bit about us and who we are and why we like to host this education, let's actually get more into some of the different events and other opportunities that we have coming up here on our calendars. Now, today's class, as well as all of our other classes that we host here at Quest, is all available to rewatch at any time on our YouTube channel. Our YouTube is a fantastic resource. We have really put quite a bit of effort into growing our YouTube channel over the past year. Guys, we bring in about 2 to 3 different guest speakers every single week, and all of these presentations can be rewatched at any time on that YouTube channel. We also host a lot of webinars. We host this series, the Self-Directed IRA Saturdays, and we also have a lot of reading content on our website as well. Also, I am very excited to announce that we are officially bringing back our in-person events this August. But If you can't make it to our in-person events here in Houston, Austin, or Dallas, we will still be live streaming all of our classes online, just like we have been doing for pretty much the past 3 years, even before the pandemic pushed everything completely online. We have always put our content out there. We want it to be as accessible as we possibly can. And if you can't make it to our in-person classes, be sure to check out the virtual networking happy hour that we host. Fred is actually a regular on this event. It's always great to see him there. And at the virtual happy hours, we get anywhere from 50 to 70 investors from across the US join us at every single online happy hour. And it's a great place to meet other investors. It's actually set up where you guys can share your cameras. Everyone gets a chance to introduce themselves to the group. And it's really created a nice little ecosystem. And we've actually been doing them for about 10 months now. And so it's been really popular. And I would definitely encourage you guys to check that out if you have not already. Also, our last big online conference, at least for a while, for the next several months, will be this summer. It is, or this July, and it is the Quest Summer Intensive. It will be I caught myself. These dates on this slide, please ignore these. They're not correct. It is July 16th, 23rd, and 30th. I caught this mistake last week. But if you guys check out the event online, all of the information is correct there. I can promise you that. But this event will be a very high-level event, 3 Fridays in a row. It's half days, so it's just in the mornings. And tickets are $25 since there is quite a bit that goes into planning an online conference like this with several different speakers from all across the country. So be sure to get your tickets for that. And if for any reason you can't make any of the days, you will have the recordings available as well at no additional charge. Now, if you are a Quest client, I would definitely encourage you guys to go check out our online portal. On the online client portal, we have several new features that we have added over the last year and a half, I would say. We have expense pay where you can initiate payments for your rental properties or any of your assets completely online through the client portal. You can upload your documents securely and encrypted so you can keep that personal information out of your emails. It's just a little bit safer that way. And the most idea that we have recently added to the online portal is the QTC Investment Hub, where you can actually now upload all of your investments, your investment documents, the supporting information, all completely online. You no longer have to fill out the direction of investment. You can just upload everything directly to the online client portal, and you'll actually get live real-time status updates from your transaction specialist, and you can see exactly where your investment is in the funding process. And it takes out a lot of the manual legwork there and is actually allowing us to fund your investments a little bit faster since everything is just uploaded directly there online. Now, my last announcement of the day today, I know I am flying through this, but we have a little promotion going on this month. It's a little bit different than what we have been doing, pretty much for every other promotion we've ever done. Now, I have heard that banks giving away toasters at one point in time was the hot thing to do. Everyone was doing it, and it almost became so common that when people opened a bank account, they were like, hey, where's my toaster? So we've brought it back. We're giving away free toasters all month long during the month of June. We have a really cute video that our team worked really hard to put together. It is completely retro themed. It looks like it's from the 50s. Nathan is in it, and he is hilarious. So I definitely encourage you guys, go to our Facebook page, check that out. And if you are interested in opening an IRA, there is no better time to do it because you'll get your own toaster. It actually is identical to the one that you see here on the screen, and it even has our logo on it. So that's all I've got for you guys. If y'all have questions, let us know. We are more than happy to help. We really pride ourselves on being very easy to get a hold of here at Quest and being able to answer all of your tough IRA, nitpicky questions that you guys have, guys. We're always happy to answer those for you. So let me go ahead and stop sharing my screen, and let me go ahead and pass the torch off to Mr. Fred Moskowitz, joining us today from Philadelphia. Guys, if you have questions, put them in the Q&A box, and we'll be answering as many of them as we can at the end. So Fred, go ahead and take it away. We're happy to have you here today.
Thank you so much, Haley. I'm so excited to be here today. And something you mentioned earlier really caught my ear. 50% of your last month's transactions were note related transactions.
Yeah. And every month too, whether it's private lending, existing notes, it's a great passive option. And it's something that, is really popular, at least among our clients here at Quest.
Wow. Wow. I love that. I love that. One of my favorite things to talk about, and we'll be getting into this today, but one of my favorite things to talk about is the power of putting together the preferential tax treatment of retirement accounts, putting that together with notes as an investment, because note investing generates a lot of taxable income, tax liability. And when you have the preferential tax treatment of your self-directed retirement accounts, it's a powerful combination. So we'll get a little bit more into that. I'll talk more about that later today. As a quick introduction, my name is Fred Moskowitz. I'm known as the alternative investment expert. And today I'm here to talk about note investing. It's the business I'm very active in. As a note fund manager, I talk to investors just about every day, and unfortunately, I see this so often. I see someone that has a great income. Maybe they're earning close to $100,000 in salary from their work, and they're sitting there in the 40% tax bracket. And so, as you can imagine, it really leaves a lot less significantly than what the person's earning. And so, my whole mission is all about education. I love teaching powerful strategies that can be used to advance your financial position in life. And whether that's teaching about note investing or other alternative investments or tax strategies, I love sharing that. And that's really my mission, to bring that out to the world and teach others, because these are all concepts that we're not taught in school, unfortunately. But I want to applaud all of you, each and every one of you, that has decided to join in and take some time to watch this webinar, because you're going to learn some amazing strategies. These are strategies that I've used in my career, uh, my 2-decade career of investing through alternative investments. I've done really well with them, and I've seen the power when you put this into place for your own life. I've seen investors start with a small retirement account and grow it substantially in just a few short years. It's so powerful. So let me get my screen share set up, and we're going to talk about supercharging your IRA through note investing. Note investing is one of my favorite asset classes, the asset class of debt. And I think that it deserves a place in everyone's investment holdings, not as your whole investment holding, but a portion of it. I always encourage people, consider having a component of debt, either in notes or originating lending as a private lender, but make that a portion of what you do, because it's an asset that generates income on an ongoing basis, and that can be very powerful and can give you so much stability alongside with the other investments that you do. Maybe you have some other investments that are more growth focused, or it's stock market focused. This is a great way to counterbalance and get some good diversity. I'm going to just take a moment to get my screen share set up here. Okay, here we go. All right. While I'm getting this set up, love to hear from some of the attendees. If you want to put in the chat where you're watching, where you're listening from, where you're watching from, what city and state you're located in. Love to make this a little more interactive rather than just having me here talking to you the whole time. If you would put in the chat where you're listening in from today. Love to interact with everyone as we're going through this. Haley, is my screen share working okay here?
Yes, you are good to go.
Great, great. Wonderful. So let's get into it. Supercharge your self-directed IRA through note investing. As some background, debt investing and the business of debt, this has been around for a very long time. Actually, since biblical times, people have been in the business of debt. And this has been around for that long, hundreds and hundreds of years. And one thing I'll share with you is banks. If you look at banks and how they operate, banks figured out a very long time ago that they would rather be in the business of lending and holding a lien against property, a mortgage note. They would rather do that than actually own property. And so you'll see this. You'll see that banks generally don't own any property. And if they ever do, they pretty much put it up for sale immediately. That's how they operate. And so I love to teach people about how to be like the bank, how to step in the shoes. You can step in the shoes of the bank and become the one that's receiving monthly payments instead of the one that's making the monthly payments every time, right? It's a bit of a shift, but this is something that individual investors can do and be very successful with it. So let's jump in. So let's talk about what is note investing. Note investing is the activity of owning debt and stepping into the shoes of the bank, right? Becoming the bank. And as I said earlier, you can become the one that's receiving the monthly payments instead of making them. And what you're doing is you are outlaying your capital. You're the investor. You are outlaying your capital, and we're going to be receiving a rate of return in exchange for that, and in exchange for taking on some risk. And there are risks with note investing, but they can be managed. And it's all about managing the risk. If you learn the skills and the techniques to manage risk, you can be very successful. Some of the benefits of note investing. The first one is a huge one. You're able to buy the asset at a discount. Have you ever bought an asset at a discount? Are you a real estate investor? Have you ever been successful buying a property at less than market value? Right? Isn't that your goal as a real estate investor? You want to buy it under market value, right? Have you ever done that before? It's hard to do, but absolutely it can be done. Well, with note investing, this is also true. We buy notes at less than at a discount. And I'll get into explaining how that impacts your rate of return as the investor. The second benefit is your investment is protected. You're buying an asset that's backed by something with tangible value. It's backed by the real estate. When you buy a note, it comes with a mortgage or a deed of trust, as long as you're buying a secured note. And that is your security. You as the lender have a security interest in the property. And so when that property gets sold or refinanced, your lien has to get cleared, and it will. And so that is always backing your investment. Maybe there's a problem with the note, problem with the borrower, something happens, there's a hiccup. No matter what happens, you always have the lien protecting your investment, and sooner or later, it has to get resolved. The third benefit, you can earn a very high rate of return. This goes back to the first point. When you buy a note at a discount, it's going to increase your rate of return, and it's going to be higher than the face value of the note. For instance, if you had, let's say you have a note for $100,000 and the face value on that note is 6%, right? So if you were able to buy that note at a discount, let's say you bought it for 90,000 or you bought it for 85,000. Well, that 6% rate of return is not the rate of return you're going to have as the investor. Your rate of return is going to go 7 or 8 or maybe even 9%. It will vary with the amount of the discount, but that's how the rate of return can become very high. And that's all part of the power of note investing. So here's some reasons why to consider note investing. There's a lot of them. I'm just going to cover a couple of brief ones here. The first one is what I mentioned earlier, being a lien holder as opposed to a landowner. This is the business model of the banks. As I said earlier, banks would rather own many liens on properties, many mortgages, rather than own the properties themselves and have all the management and maintenance issues that come along with owning hundreds and hundreds of properties, right? The next benefit is the owner mindset versus the tenant mindset. Now, think about this. When someone is, let's hypothetically speaking, someone owns a property, whether they live in it or they rent it out, they own the property. You have a pride of ownership. You take care of the property, you maintain it, you maintain the landscaping, keep it clean and orderly, and it looks good. It adds a pride of ownership to the neighborhood. That's the mindset of an owner. When there's a maintenance issue, they take care of it. They address it. And so property looks great. When it looks great, you know someone's taking care of it. They're putting in that constant ongoing effort to make sure the property looks good. Now, on the other hand, what's the tenant mindset? The tenant mindset is when a property is rented out to a tenant, something breaks, there's a maintenance issue. Let's say the heater goes out, or more relevant for this time of year, what if that air conditioning compressor fails, right? In the hot summer months, they'll call the landlord, they'll call the property owner, who will make arrangements to have that taken care of, right? If there's a problem with the plumbing or maintenance issue, anything like that, most likely the tenant's not going to do anything but call the owner and have an expectation that it gets resolved. They're not going to really do too much on their own or take initiative. That's the tenant mindset. Unfortunately, a lot of times tenants don't do well at taking care of property because it's not theirs, it's someone else's. And the property may not look as nice as an owner occupied property. And we see that all the time. Now, with note investing, continuing on this point, you can avoid the 3 T's. The 3 T's. They're tenants, toilets, and trash. As a note investor, when you own a note on the property, you're not getting those calls when there's an issue with the toilet, or the property, the tenants moved out, the property's full of trash, needs to be cleaned out. The lender does not get those phone calls. Or if the air conditioning compressor needs to be replaced, the lender does not get a phone call about that. They do not get involved in any way. In any way. The last advantage is the ability to scale. I'm going to give you a quick example about this. For note investors, it's very easy to scale up your business of owning notes and investing in notes. Think about this. Do any of you out there, do you own rental properties? Right? Rental properties are a great asset class, but unfortunately, it's hard to scale that. And here's why. Think about this. Let's say you own a couple rental properties, and you build up a nice portfolio. Maybe you built up a portfolio of 10 rentals. And yeah, it takes some work, but you're doing well with it. Great. Well, what happens if you try to scale that up? What if you wanted to 10x your rental portfolio, and you wanted to go from 10 to 100, right? Think about that. Could you do that? Is that logistically possible? Let's say you had the money to do it, the capital to buy all those properties, but could you expand and manage efficiently going from 10 to 100 properties? Yeah, I know you can. It is possible. I actually know investors in my community here where I live that own over 100 properties. And what's that like, right? What's that like? Well, the management effort on that is intense. You have to have a crew of employees and repair people and rental agents and managing all of that. Even if you outsource all the work, there's still a lot of work to keep an eye on that. So think about this. If you went from 10 properties to 100, what would your quality of life look like? It would be a drastic shift. Now, as a note investor, if you wanted to do the same thing, because of the vendors and service providers that are involved in note investing, like note servicing companies, which are a critical team member for you as a note investor, you can really scale. You can scale massively from one note, two notes to 10 to 50 to 100, or even thousands of notes. This makes it all possible. It's very easy to scale up. And that's why banks do this flawlessly. They can ramp up relatively quickly and expand to a very large portfolio. Now, note servicing companies, they have such a vital role. They think about this. They take on the management of the note hands-on. They deal with the calls from the borrower. They send out the monthly statements. They take care of the compliance. I'll get a little more into this further on, but it's a lot, and they do that at a very low cost per loan. But the main thing to remember is they allow you to scale, and that's great. It's so powerful. So for you, let's say you're really liking this discussion and this concept idea of note investing. Well, how do you get started, right? How can you get involved? There's a couple ways. The first way that will resonate for any of you that are note investors, or if you're a note investor, you know this strategy: selling a property with owner financing. It's a great way to get involved in note investing. Some nice tax benefits with that as well. Talk to your CPA if you want to learn more about that. But if you're a or a real estate investor, you're experienced, you probably know about this. So any time you can sell a property with owner financing, it's a great strategy. The next way to get involved in note investing is buying an existing note, right? There's a secondary market where notes are bought and sold and traded every single day, and you can tap into that market and buy an existing note. You don't have to be the one originating it. You can buy an existing note, and hopefully you're a good negotiator and you can negotiate a nice discount on that. And here's a third way. The third way is by investing in a professionally managed note fund. Maybe you want to be more passive, or rely on the experience of the fund's team. Well, a note fund is a great way. It's a great way to get involved in note investing, where you're going to be passive. You're a passive investor, and you're relying on the expertise and the skill set of the note fund management team. They take care of the due diligence and finding the notes and managing the notes and all the compliance, all of those things. It's taken care of for you. So for some people, maybe you have your own business, you're busy, or you're a successful professional. You love the idea of note investing, but you don't really have a lot of time to dedicate to it. Well, maybe a note fund is a great option to consider. So let's talk about some risks now. We're going to move on. What are some of the risks involved in note investing? Note investing is not without risks. There are many. However, these risks can be managed and mitigated. And when you do that, it's going to set you up for success. So here's some of the risks. I'll talk about a few of them. The first one is threats to the lien. Any lien is going to have threats to it, threats to the position of lien all the time. And as I describe this, you're probably going to be familiar with some of these things and understand why banks do what they do. Have you ever taken out a mortgage and you see that the first thing that the lender will do is they're going to want to set up an escrow account to make sure that taxes and insurance and homeowners association fees are paid. Why is that? Because all of those things can threaten the lien position. If taxes do not get paid, and this is in many states, if taxes or homeowner association fees are not paid, they can lien the property, and that lien can jump up in front of the lien position of a mortgage and threaten it. It could even wipe out the mortgage in certain states. This is state-specific nuances, but these are all threats to the lien. So as a note investor, you want to manage those, and the way to do it is by monitoring it, either monitoring it manually or using a service to do it for you, or having an escrow set up, which the loan servicers will do that if you want them to. They can set up escrow where every month, basically 1/12 of the taxes and insurance and homeowners dues are paid in, and then the escrow account pays those on behalf of the homeowner. They're paid by the lender on behalf of the homeowner out of that escrow account. And that way the lender ensures that all of these expenses are paid in a timely manner, that taxes do not get behind, that the property will not go to tax sale, all of these things that can happen. So that's some of the threats to the lien. The next risk is regulatory compliance. So as you can imagine, our government has been on an upward trend with regard to compliance and regulations for businesses of all types, for landlord-tenant law, for owning property, owning debt. All of this, the compliance has gone up. It's going up, and the trend will continue. This is not on a downward trend. And so part of that is learning about compliance and regulations. This is very state specific. So whatever state you're actively investing in, you want to stay abreast of compliance changes in the law and what's going on in your specific states. So having a good legal team on your side is important. Now, the last risk I'm going to talk about is lack of diversity. Lack of diversity. If you have investments in notes and you have just a couple of loans, couple of notes, all your risk is spread out. Maybe you only have one note. Well, all your risk is in one note, one deal, right? I like the idea of spreading out risk. So maybe instead of buying one large note for $100,000, if let's say that's the capital you have, $100,000 to invest, instead of buying one note, I would prefer to see you buy four smaller notes. Maybe they're $25,000, 30,000. Buy four smaller notes, and now your risk is spread out on four deals. And if you have a hiccup or anything goes wrong with any one of them, you have the other three moving along to carry things forward, right? It's the same concept with real estate investing. Instead of tying all your capital up in one deal, spread it out for diversity. And if you think about it, this is don't insurance companies do this? They spread out their risk by insuring a large pool of insureds. And that way, whether they pay claims out here and there, they still have the whole pool of premiums to help balance and carry that risk. So as note investors, we can learn from taking a page out of the playbook of insurance companies. And don't you think insurance companies know what they're doing with managing risk? I mean, these companies have been around for hundreds of years. So I always like to say that take a page out of their playbook and utilize some of those same strategies. So let's talk about owning notes in a self-directed IRA. How does that work? Right? The first one is preferential tax treatment. Note investing generates tax liability. So combine that together with your self-directed IRA for tax deferred treatment. Or if you have a Roth IRA, even better, you have no tax due at all on any of the income and profit from note investing, which is powerful. It's a powerful combination, right? Next point is when you buy a note in your self-directed IRA, the note gets titled in the name of the IRA. The IRA is the owner of that asset. And so on the loan transfer documents, the loan documents, and the purchase and sale agreement, it's not going to have your name as the buyer, but it's going to be your IRA reference there. And that's how the titling gets done. Next point is, how do the payments get handled? When the borrower makes the payments are going to go into the IRA account directly. They won't go into your hands. That helps keep your IRA compliant, where there's no mixing of funds or anything like that that could threaten your status, the tax status of your IRA account. So if you have a note, it's being serviced by a professional loan servicer. They will send the funds when the payment's collected directly to your custodian, to Quest, and it'll get credited right to your IRA account directly. So it's totally hands off to you as the account holder. And note servicers, they manage the note for you. They take care of just about everything on your behalf. And so it keeps your IRA compliant because, as you know, you're not allowed to do any work on the assets in your IRA. So having a loan servicer is going to be an important part of keeping that compliance in place for your IRA so that you don't run afoul of any prohibited transactions or any issues with the IRS. That's the last thing you want, is to have the IRS coming wanting to look at your IRA and the transactions that you've done. So if you have a note servicer, it's totally hands off for you, and that's a good thing. Last point is, as Haley mentioned, your IRA custodians are well set up, well experienced to handle note transactions. It's something they do day in, day out. If you have any questions about the mechanics of how that works, just call your custodian, call up Quest. They'll be happy to walk you through how that works. It's something they do all the time. So let's say that you're interested in investing instead of individual notes, you want to consider a note fund, right? So investing in note funds out of self-directed IRA is very simple. The ownership, just like with a note, the ownership interest in the fund, it's going to be titled in the name of your IRA, right? Your IRA is going to own the shares or the ownership interest in that note fund. A note fund, what a note fund does, I don't believe I touched on this yet, but a note fund raises capital from investors. It pools that capital together, and then they will go out to the secondary market and buy notes in bulk. And so the benefit of that is that because the transaction sizes are larger, there's some economies of scale. They can negotiate better discounts, earning a higher rate of return than you might be able to do on your own as an individual note investor. And so that allows the investors who wish to be passive to leverage the experience, the expertise, and the relationships that the fund managers have. They have those relationships in place to be able to get access to notes, to buy them, to do the due diligence and analyze them, making sure that good assets are being acquired. These are all great benefits to the investor to participate in this manner in a note fund. Again, for someone that doesn't have a lot of time, or maybe they're new to note investing, it's a great way to get started, a great way to get involved where you can participate in note investing. You can learn as you go and benefit from those relationships and experience of the fund managers. So let's move on. So when an investment is made in a note fund, the return payments, right? The note fund will pay out its return payments on the predefined schedule. They're going to get sent back directly into the IRA account. So they will go to the custodian. They'll get electronically transferred, and then it'll get credited right in your IRA account. So literally, it's a hands-off investment. And note funds allow for greater diversity and a truly passive investment. As I mentioned earlier, you can invest in an individual note for, let's say you had $50,000 or $100,000. You could buy one note with that. But if you invested in a fund, well, then your $50,000 or your $100,000 investment is spread out over hundreds of notes, or maybe even thousands of notes. And so that gives you a lot of diversity, a lot of diversity. And that's a good thing. That is a very good thing. So I really like the idea of expanding diversity across many assets. And a note fund is a great way to do that. And the last benefit, as I mentioned earlier, you're leveraging the skills and the experience and the relationships of the fund managers. So this allows the investors to leverage that human capital, leverage those relationships, leverage that expertise, put it on your side, right? This always reminds me of that quote. That quote from Aristotle. Have you ever heard that quote? If you give me a lever long enough and a place to have a fulcrum, I can move the weight of the earth if I have a lever long enough. And so that's the idea of that leverage the human capital, leverage the human capital of the people that you work with, the people that you partner with, because relationships are one of the most powerful things, no matter what type of investing you could ever do. Relationships are key. And personally, for me, it's one of my highest values. I always seek to build relationships with other investors, build relationships with other people that are in business partners. It is one of the most powerful things that you can do, no matter what industry you are in. So, Haley, I see we're up on about 45 minutes, and what I'd like to do is shift over to Q&A, answer some questions from the audience. I'd like to share a couple of resources here really quick. Some for anyone that wants to learn more about note investing, have a couple of books I can talk about. First one, that's the red book that you see here on the screen, Invest in Debt by Jimmy Napier. Jimmy Napier is the granddaddy of note investing. He wrote this book, I believe, in the 1980s. It's still in print. It's still available. It is such a great book, and it gives you a great education on using a financial calculator, which is a great skill to have. He has a lot of examples that you can work through. Highly recommend that book. The next resource for anyone that's interested in note investing, you want to be able to get good at working a financial calculator. It's such an important skill, helps you analyze any type of investment, any type of cash flow. And two great options are the workhorse, the classic HP 12C, which has been around for decades, right? But maybe you're more in the modern times. There's a wonderful smartphone app called 10BII. It's a great app, and let me tell you, it's not free. It does have a cost to it, but this is the best $6 that you could ever spend buying that app. Just take your smartphone, go in and look for that 10BII, and then you'll have a financial calculator right on your phone, ready to do work for you anytime you need it. I mean, I have it and I use it almost daily. It's great. And when you have that app, you can follow along with Jimmy Napier's Invest in Debt and get good at using that. And just remember, when you have a financial calculator, you want to get good at working that top row of buttons, the 5 buttons at the top. Get good at that. And that's going to really help you in doing any analysis. Last book, there's a green book that's out there called the Little Green Book of Note Investing. It's got a great overview of how to get involved in note investing, some of the things I spoke about today, how to analyze notes, and how to do due diligence, and a great section on working with IRA accounts and the power that can bring when you put together self-directed accounts and that tax treatment along with note investing. I'm going to share my contact information here with you because I don't have a lot of time with you today, unfortunately, but I do have a lot of time if you come to me. If you come to me afterwards, reach out. I love speaking with investors. I speak with investors almost every day, and I love learning about what different strategies people use, different businesses that you're in. So feel free to reach out. I love connecting with other investors and networking. So what you can do is you can visit my website, fredmoskowitz.com, or if you prefer on your smartphone, just text the word note to 47177. And one thing I'd like to do is I'd like to offer a free gift for anyone that's on the webinar today. If you'd like to receive a special report about note investing, just go to my website, fredmoskowitz.com, Or for some easier spelling, you can go to giftfromfred.com and just follow the prompts, sign up there, and be happy to send you a special report about note investing. So let's do some Q&A. Haley, I'd love to answer some questions and help out anyone in the audience today, add some value.
Yeah, definitely. And Fred, feel free to keep your screen shared while we go through in the Q&A so they can still see your contact information there. But we definitely do have a few questions. One of our attendees wants to know, would you please briefly discuss note purchasing options for potential investors maybe with lower IRA balances, maybe anywhere from like up to 25,000 or up to 50,000?
Yeah, there are a lot of options. A lot of options. You can buy smaller notes, right? Smaller notes for sure. I've seen notes that have balances of $10,000 up to 50. That was the number you asked about. Up to 50,000. They exist. I buy notes all the time in those lower denominations. But here's another strategy that I didn't really get into today because it is more of an advanced concept, but it's the idea of a partial. A partial on a note is when you buy, instead of the whole note, you buy just a portion of it, right? Let's say you have a 20-year note. Well, a partial is that, what if you bought just 2 years of payments on that note? And so your purchase price of that is going to be a lot lower than buying the entire note. And that's perfect if you have a small balanced account, like a small balanced IRA. Maybe you opened up your IRA, you funded it for 1 or 2 years with your contribution, and that's the amount you have in there. That's a great way. Partials. I actually have a whole chapter in my book dedicated to explaining about partials and how they work and how to analyze them. But if you network with other note investors, you can buy partials. You can always ask, when you meet someone that's a note investor, ask them if they have any partials to sell. And it's a great strategy. I mean, I love joining the networking sessions that Haley runs twice a month. There are always at least a half dozen note investors that join in on those sessions. It's a great way to meet other people in the industry, and you can talk about partials. So definitely explore that as an option. And also note funds. They may be a good option for some of those smaller balanced accounts as well.
Mhm. Awesome. Great answer. And it kind of leads me right into the next question, which we've actually almost always have several people ask this one. Where do I find the notes to invest in? How do I find the notes? Give us some insight there.
Note investing is the note investing business. It's a small world. It's a small world, and everything's done on relationships, everything. And so what I can say is, you want to meet, I encourage you, meet other note investors, get out there, network, go to events, whether they're in person or online, but meet note investors. And they're the ones, note investors always have notes to sell. They're always looking to buy notes. People always need to raise capital, and so they may sell some notes off. Notes are super liquid, and you can sell a note very easily. It takes days to sell a note. And so getting out there, networking and talking to people, building those relationships, that's the best way. You're not going to find any kind of trading marketplace for notes. It's difficult. I mean, there are some out there, but I've had a lot of success just with networking. It's one-on-one relationship building, and doing that on an ongoing basis. Networking and relationships, that is the key. I hope that helps.
Mhm. Yes. And just a quick reminder, guys, be sure to join us for the virtual happy hours that we host. Our in-person events are coming back in August.
Yeah.
You will definitely find some opportunities there to potentially find people that might have the investments that you're looking for. So Fred, great answer there.
Yeah. I will say you will find people, you will find people that have opportunities always, always.
Hmm. Definitely. Let's see, we've got just a few more questions here. This is a good one. In a note fund, are you still in the first lien position? How does that work?
It depends on the structure of the note fund. Note funds may buy, they may limit, you have to look at the fund's business model and their business plan. Note funds may decide that they're going to buy only first lien notes and that's it. Other note funds, their business model may be that they raise capital and then they originate hard money loans to investors for fix and flip properties, right? That might be a different model. Or you could see another note fund where their business model is they're buying second lien notes, junior liens, which has its own strategy. And so the note fund will need to describe that to you through their documentation. But in general, note funds want to invest in notes that are secured. They're secured and backed by real estate. The lien position will vary, and it's just a different business strategy for each one. So for anyone as an investor, you want to learn what that is, ask those questions, and understand that, and make sure that it's in alignment with what you're looking for.
Hmm. Exactly. And guys, we've actually gotten this next question a few times, so I'll go ahead and ask it. But before I do, I want to preface this with, our speakers are here to educate. We're not here to pitch investments or anything like that. But Fred, we've had actually 3 people ask now, do you manage a note fund yourself?
So note funds are very, very very powerful. There are so many of them, so many of them. You will, if you look for them, they're out there. Note fund managers frequently will speak on podcasts. They will speak at conferences, investment conferences. A lot of them can't advertise their funds, and so it's a matter of building those relationships, reaching out to people, do a little networking. Um, that's the best way to find note funds and get to meet fund managers as well. It's all through personal relationships. That's it. But for any investing that you could ever do, this is one of the most valuable skills that you can have is networking. Get good at networking, get good at meeting people and building those relationships.
Hmm. Exactly. And something that I also always like to say, even if the person that you're talking to right now doesn't have exactly what you might be looking for, there's a chance that they probably know someone who does have exactly what you're looking for. So still
Yeah.
go out there, build the connection, build the relationship, because you never know who they might also have in their circle. And I think that's something that's really important and not to be overlooked as we're going out and building relationships in this industry.
No, that's so true. That's so true. Everyone, the more people that you meet and that you talk to them about what you're looking for, someone always knows someone else. They can make an introduction. They can point you in the right direction towards resources. That's a big part of networking, isn't it, Haley? It's
Hmm.
how do you add value to someone else? I love doing that, right? Paying it forward. I give out referrals to people all the time. I do, and I don't mind. I don't mind. I love putting together people and being a connector. I
Hmm.
get a lot of satisfaction out of doing that. And I find that most people do as well. People are generally open to providing a referral, reference, an introduction, and helping others because ultimately, isn't that what we all want to do is to help others and do better, uplift and up level all the people around you in life.
Exactly. And it feels really good to know that you've helped someone out. It's one of the reasons I really get a lot of satisfaction out of teaching people about self-directed IRAs, because it is something that really does help people. And I think that's really awesome. Fred, we've got time for maybe just one or two more questions
Okay,
here.
great.
This attendee, he started out his question with, I realize this is very much it depends question, but I'll go ahead and ask, what is a fair or average rate of return that we might expect if we're investing into notes? 8 to 12%, 15? Do you have any insight here?
Yeah, I do have insight. It can be all of the above. That's the answer. Okay. Um, all of the above. It depends. A lot of it depends on how much risk are you willing to take, your risk reward ratio, right? So let's say you have a note which is on a pristine property in a desirable area. There's a lot of equity backing the note. The borrower has a solid track record, all these good things. The note's in first position. You may be looking at a 4, 5, or 6% rate of return on a note like that. But what if you, on the other hand, looked at a note with a little higher of a risk profile? Maybe it's the note's not in first position, but it's in second or third position. Maybe there's not strong equity backing that note, or the payment history is not pristine. All of these things, or maybe there's some title issues. Now that note could get a rate of return that's much higher. And it all comes down to, what are you comfortable with? What's the experience you have working with a note like that? And what can you do? And so if you're willing to take on a little more risk, your return will be higher, just like in any other investment. But to better answer this question, and yes, it depends. I've seen, to give you a range, on the low end, 4 and 5%, up to 16% on the high end on something that's a little more riskier. And it can be anywhere in between. So whatever you're looking for, it's out there. It depends on what you want and what's right for you in your own personal situation and how much risk you want to take on.
Exactly. That's such a great answer there. And again, it always depends. I think we could answer almost every question with the beginning of that answer.
Right.
But Fred, that's about all the questions that we have. Thank you so much for joining us here today. Before we sign off, I always like to end with just kind of one final question. If you had any last kind of words of thought or pieces of advice for our audience out there today, what's maybe one last kind of piece of advice that you would like to offer for us today?
Oh, I love this question, Haley. Yeah. So, what's a good thing? I'm going to draw back on one of our founding fathers. Right. I love history. So I'm a Philadelphia guy, right? So let's look at one of our founding fathers of this nation, Benjamin Franklin. And one thing that he taught us is that an investment in yourself always will pay the best and highest dividends. And I just love that quote. I love the idea of that, because think about this: an investment in yourself, it's going to pay the highest rate of return always. And it doesn't matter what you do, what you invest in, what business you're in. Always seek to invest in yourself, in your skills, learn, grow, because whatever money and time you put into that, it's going to come back to you many, many times over. And so I encourage each and every one of you, invest in yourself. Do it on an ongoing basis. Every year, set aside some money and set aside some time to invest in yourself, to take classes, to attend events. Maybe you have to travel to them or a conference, but do that. Always look to learn, to grow, network, and get around people that are going to uplift and up level what you are doing.
Mhm. That's awesome. And what a great note to end it on for the day. It's so true. My boyfriend even just hired his own performance coach, and I'm so excited for us to personally get to the next level in our own lives. So guys, it's so true. Invest in yourself, surround yourself with the right people, and keep on networking, keep on doing it. Where the world's getting back out there, and there's a lot of opportunities to be had this year. So we'll wrap it up with that. I hope you guys have a fantastic rest of your weekend. Fred, thank you so much for taking the time to join us today. And I'm sure we'll see you back here again soon.
Thank you, Haley. Thank you. This has been such a fun afternoon, speaking with everyone and sharing some ideas and concepts. Thank you so much for having me on today on the webinar, Haley. Thank you.
Awesome, Fred. Thanks. We'll see you later. Have a good day, everyone.